Great. So welcome everybody to, what's that? Up to you. Welcome everyone to our second, or you could say our follow-up session to our previous time that we had together at the beginning of August. For those who are joining us online or perhaps will be watching this in a recording, thank you very much for joining us. We did a training like this, as I said at the beginning of August, for our new Vicar General, and we called it VG 101. And it wasn't just for him, it was for the whole staff. And at the end of it, someone said, you know, we should have recorded that. And so this time we're learning our lesson and we're trying that. And so hopefully this will be of use for us, for any future staff we may have, for anyone else in our diocese, and frankly, anyone else in the Catholic Church who has an interest. So today we're going to be doing the follow-up part. Last time we talked a lot about church structure. Today we're going to be talking about the administration of church goods, administration of church property. But it is a follow-up, so we're going to rehash a bit some of the elements of church structure as it relates specifically to the administration of church property. Is that okay? Excellent. All right, so the first thing we need to understand about property is that it only becomes property, stuff only becomes property when it's owned by somebody, right? Otherwise it's just there. Like the moon is not the property of anybody. It's there, it's in the sky, it's in outer space, but nobody technically owns the moon, so it's not considered property. So things become property once there's a claim of ownership upon it. And so generally, property is understood, so if we take property, property is understood to be owned by individuals, and it's understood to be owned by what we call legal persons. So individuals are physical persons, so you and me, and then there are also legal persons, which we often call corporations. That's a term for legal person. Legal person is more of a generic term. We usually think of it as corporations. Now, to understand this a bit, we have to understand that obviously a physical person can own property, but sometimes a physical person owns property but they can't administer property. For example, many of you know that my mom is suffering from dementia, and so she can't manage her own property. She owns the house, but she can't manage it. So I have power of attorney, and so I manage her property for her. I'm acting like a trustee for her good. And so this idea of you can own it but not be the manager, someone else manages it, became part of the seed of this invention called legal persons. In other words, what if by law we just invented a person? You know, we don't give a fake birth certificate to a fake physical person. What we do is we create a company, so it becomes a legal person. It can't make any decisions because it doesn't have a brain. So we appoint people to act to administer the property. So we distinguish between the owner, which is the legal person, right, and the administrator, who's the one who actually looks after the property of that legal person. I've heard it said, I've done a bit of research on this, that the idea of legal persons as a concept actually arose within the Catholic Church. Previous to that, we had this idea that you could have associations of people, and like clubs, and they could have property that sort of belonged to the club, but they weren't created as actual legal persons. Somebody in the club had to own the property, not just manage it. They had to own it on behalf of the club. But then when monasteries got started, the monks took vows of poverty. And one of the legal effects back in the day of a vow of poverty is you couldn't actually own anything, not even on behalf of somebody else. So if you can't own it, then obviously you can't be administering it either, unless you create the concept of a legal person. So with a monastery, the monks come and go, new ones join, older ones pass away, whatever, but the monastery remains. And so it became understood as a legal person, recognized by the king, the baron, the whoever who ran the government at the time. And so he would recognize that there was a leader in the monastery who had the power to administer the goods of the monastery. So it actually kind of started with us. Again, I haven't done a PhD on that, but that's my understanding, is the concept of legal persons emerges from Catholic tradition, and specifically because of this idea of you can actually administer things you don't own for a collective body like a monastery, which becomes the actual owner. So this is the key idea behind the management of property. Now, I've also hinted at something important. You don't become a legal person unless you're recognized by an authority, by some kind of government. Individuals can get together and create clubs, right? They can create groups that have an identity, they have even a brand, they can have a name, but it doesn't mean that they're recognized legally. The mafia is a good example, right? The mafia is a group. You can join it. The mafia technically can have property, but it's not recognized as a legal entity, obviously. And so law, some sort of authority needs to intervene to say, you are recognized as a legal person. And the main advantage of being recognized as a legal person, as opposed to being an informal club, is that you can go to court, you can defend your rights, you can be registered on title for a house or a piece of land or something. If you don't have that, who do you put? Who is it that's actually interacting and defending the rights of that person? So you wind up with these unincorporated entities that exist, they're out there, but it becomes kind of murky. And so having the legality of it clarifies things a great deal, and it comes from an authority. Any questions so far? Straightforward? Okay, good. So when we look at the government, okay, we look at the civil sphere, we see that there are layers of who can own stuff, right? So obviously at the top is the sovereign, otherwise known as the crown. So that's in Canada, that's the federal government, that's the provincial government. So federal, provincial, and by extension, it's not actually the crown, but it is a layer of government that exists, the municipalities. We are getting an echo in here. So the municipal government, it's not actually considered the crown, but it is a layer of government. So that's the top layer, right? Then you have another layer, which is created by the sovereign, which we call crown corporations. Now, a crown corporation is not actually the government per se, but it's created by the government. Sometimes crown corporations act on behalf of the government as agents. Not always, though. But the idea is they're supported by the government to accomplish some purpose for the public good. And there's lots of them. Canada Post, Via Rail, the National Art Gallery, CBC. And so these various corporations, they have their own board of directors and they have a lot of autonomy. They're founded by the government to accomplish a public good, some public purpose, but they're not the government per se. They act with a certain degree of autonomy in the management of their internal affairs with their own board composed of citizens, composed of ordinary folks. So that's crown corporations. Then if we go from the bottom up, the polar opposite of the sovereign is the individual, right? The private person, which I mentioned earlier. So the private or physical person. And then individuals can get together into associations or partnerships. So what they do is they form an agreement among themselves in order to be able to work together. And in that agreement, they define what their rights and responsibilities are in that partnership or association. Then you have a level up from this, which is a corporation. There are different kinds of corporations. Your typical business is often a corporation. So you have corporations with shares. So the ownership of the corporation is defined by how many shares you buy. And you can also have not-for-profit corporations. So they don't have shares, because technically shares define how much share of a profit you get, and if you're not making any profit, what's the point? So they don't have shares, they would tend to have members. The difference between a not-for-profit and an association, between a share company and a partnership, is basically below this line, it all depends on you as a physical person. Above that line, you're now a legal person. You have a charter from the government, whether it's the federal government or the provincial government, saying, guess what? You are now a legal person, which means it's that company that actually owns everything. Okay? It's that the board of directors who manages it, as I explained earlier, on behalf of the company, on behalf of this legal person. You have another layer in here. I probably should have put it in between. It's called a trust. So in a trust, it's not a company, but what you do is you take some property aside for a particular purpose, and you appoint trustees to manage it. It's a structure that we see a lot of in Canada, in common law especially. So you set property aside, somebody else manages it, they own it, but they own it for a particular purpose. And so it has a distinct existence, you might say. And those are created through a trust document. Now, these are all still private, even private corporations. And everything above this line, that's considered public. Like I said, even a crown corporation is founded for the public good. You have something in between called parapublic corporations. So what's a parapublic corporation? It's technically a private corporation, but it's doing something so important for the common good that the government gives it money, funds it, and if you fund it, then you also regulate it. So these are funded and regulated. So although they are technically private corporations, because of that funding and that regulation, they acquire a kind of pseudo-public status. A good example of that is a university. A university is often created by a group of people who get together and they say, we would like to create a university. And so they get a charter from the government to start a university. University of Sudbury, here in Sudbury, or Laurentian University are examples of that. But they get government money, and so they're regulated. They're answerable for that. And so, for example, with the difficulties that Laurentian University is currently experiencing, I'm not going to make any editorial comments on that, but you may have noticed that in the public debate, a lot of people are saying the government should bail out the university in its financial challenges, because there's a perception the university is offering a service to the public that's so important that the government should be there. The government's not usually going to bail out a private company if it was a purely private company. So that's why you have this kind of in-between zone where it's perceived as being so important the government should intervene, perceived by some, but others might say, well, hang on a second, it's not actually a government corporation, so it should be left kind of manage its own affairs. So it's in that kind of in-between zone. So is this clear? I realize it's kind of a broad example, but I'm trying to draw examples from real life to then apply them to the church. Because when we look at the church, as we saw in our session in August, so the church is sovereign in its own sphere, right? The church is considered a sovereign entity. I mean, the church has been around longer than the country today known as Canada. And so it is considered a sovereign entity. It sends diplomats around the world. It's a permanent observer of the United Nations, a member of other international groups, sends diplomats, Vatican issues passports, all that sort of thing. So there is a sovereign reality. And this is recognized by Canada because we have an embassy to the Holy See in Rome. I mean, I've visited it. I've talked with, former Canadian ambassadors to the Holy See. So in this case, the sovereign is, I'm going to put church. So what would the sort of head level, we had federal and provincial for Canada, so that would be the Holy See is the universal jurisdiction, has universal jurisdiction. The Holy See is another term for the Bishop of Rome, the Pope. And the provinces would be dioceses. Each diocese is considered, just like a province is not totally sovereign, but it does have jurisdiction, genuine legal jurisdiction in its area. So a diocese is not totally sovereign, but it does have the power to create particular law for its territory. The bishop of the diocese can do that. And then just as I said, municipalities, they're not technically sovereign, but they are layers of government. We have, the rough equivalent is parishes. Parishes are another layer in that. And so just as your city can own property, somebody owns the city snowplows, right? The city owns them, so a parish can own property as well. Crown corporations. Do we have the equivalent in the church? Absolutely. I'll give you an example. A seminary. Okay, suppose you run a school to train priests. Under canon law, a seminary is a legal person. By the simple fact of creating it, it becomes a legal person. But it's not a diocese. If it's a legal person, it's distinct from a diocese. It's not a parish. And obviously a seminary exists for the public good of the church, right? It's for training ministers. And so it would be considered an equivalent in that area, created for a particular purpose. There are also what we call public associations of the faithful. So a public association of the faithful is a group that is founded by church authority to accomplish some good. It rallies people together to accomplish some element of the public good. A public association of the faithful is allowed to actually act in the name of the church, to speak, to teach in the name of the church, to offer divine worship, liturgy in the name of the church. So it really is, like a crown corporation, it has autonomy, but it's still answerable directly to government. A public association has autonomy, it has its own board of directors or whatever, but it's answerable to church authority. So if we go the layer under, obviously we believe in individuals, right? We think individuals can own property. We have associations in the church, we recognize them. We call them private associations of the faithful, as opposed to public associations. So in other words, a group of the faithful can get together and say, we would like to create a church group. And it may be incorporated, it might not. It may have legal personality, or it might not. But it may get together. And we see this all the time, right? In parishes. The seniors group. Well, it's a group. Sometimes they give themselves a name, we're the Golden Agers Club of the parish of X or something like that. So they've got a name, they've got an identity. Sometimes they get their own logo, they have their own email address, their own website. somebody's in charge, you know. They may not have a lot of rules determining who gets to be in charge or what have you. So it's a group that exists. It can be kind of fuzzy, like I said, just like in ordinary life, you can see that. In the church, we don't really have trusts, but we do have something similar, but honestly, that's a layer that I don't think we need to get into today because you don't see it that often. In the church, we also have corporations. We don't call them corporations, we call them juridic persons. We don't have profit juridic persons in the church. They're all nonprofits. And they all exist in order to pursue some element of the mission of the church. Now, like I said, some of them are founded directly by the church to act in the name of the church. Others, no. It's a group of people who say, you know, we should have a food bank. Yeah, you know, we should have a food bank. And they're not waiting for the priests or the bishops or, you know, the people, quote unquote, in charge to do it. They just say, no, we're going to do it. And so out of their own initiative, out of their own sense of this is the mission God has given us, this is what Jesus wants us to do, they create some kind of charitable initiative. Now, they may do it just as a private association, or they may seek recognition as a juridic person. This is the equivalent of incorporating on the church side. Now, to be honest, in Canada, most people don't go this route. They don't try and get private recognition as a juridic person. They don't usually do that, simply because they usually just go to a Canadian lawyer and get incorporated under the laws of Canada. That's what we usually see. But this does exist in canon law. For this parapublic thing in between, where it's not the official hierarchical church, but it's more than just people acting on their own, can we think of a layer in between? I'll give you an example. Religious orders. Okay, so let's say you have a monastery of nuns or a convent of nuns. Who owns the convent? It's not the diocese. We don't own the convent. So it's the nuns, right? They have created a religious order, and that religious order owns the convent. But in the minds of the ordinary person, the convent is not seen as their own private property. It's seen as church. You go to the convent, you're going to the church, quote unquote. So it's parapublic, right? It doesn't actually belong to the official church, but it's kind of seen that way, a bit like a university. It's actually owned privately, but it's seen as public because it's contributing to the public good. And so within the church, we recognize this layer, and it's important for us in our canon law, because remember, we're talking about this to set the stage for the administration of church property, but the question is, what is church property? We know that everything above this line, that's church property. Definitely. Everything below this line is not church property. So the individual Catholic who goes to church and, gets involved in their parish, the church does not claim to own their house. They own their own house, okay? That's private property. It's their house. It's not church property. And if a group of people get together and decide to found a food bank, it's not church property either. It belongs to the group that's running the food bank. Obviously, a seminary is church property. And then when you get to the convent of nuns or other religious orders, strictly speaking, it's not church property. A bit like the university is not government property. But because it is so closely associated with the good of the church, and it's perceived as being part of the church, it does get regulated as if it was church property, even though it doesn't strictly belong to the hierarchy. So all of this stuff gets managed under a category called Ecclesiastical Goods. All of it, even the religious orders. And I'll be honest, if you look at the history of the church and you look at disputes, hopefully not too often, but when you look at the occasional dispute between, let's say, a diocese and a religious order that's operating on the territory of that diocese, you have to clarify who's running what, who's acting on behalf of whom. Requires a lot of, careful delineation of responsibilities, precisely because if you have a group operating on the territory, let's say, of a diocese, and people are looking at it and saying, well, that's the church. Look at the nuns. They're wearing habits and veils. They must be acting on behalf of the church. That's the public perception. Well, you have to be careful about how you are sharing that work together and clarifying who is what. Because honestly, it's easy to go buy a Roman collar. You can order them online. Somebody could make themselves a veil and go around calling themselves Sister So-and-so. And let me tell you, it happens. And occasionally we have people who take their house and they convert their living room into a chapel and they start to invite people over for prayer and they, buy some church benches on eBay or whatever. And so it creates this ambiguity. We need in the church to be able to identify clearly who is doing what on behalf of whom and who actually owns what. Because to be honest, a lot of these disputes, when they occur, it's not for nothing that St. Paul said that the love of money is the root of all evil. And unfortunately, sometimes church disputes become strongest not over doctrine, but over who owns what. So clarity in that serves peace. It serves peace in the administration of the church. So that's the basic background. What I would like to do next is talk about, okay, we have these ecclesiastical bodies, and we have people designated to administer those terms. Just like I said earlier, I'm the administrator of my mom's property. So you have a church entity, and it has administrators. And I'm not allowed to do whatever I want with my mom's property, right? I'm a trustee. I have to act for her good. I have to be promoting it. I can't use my mom's property to, buy myself a new car. I think everybody would recognize that would be evil. That would be an abuse. So the administrators of church property have to act on behalf of the church for the good of the church. They have limits as to what they can do. They have authority. I have authority for my mom's property. They have authority for the assets of the church, but it has to be circumscribed. That's why we say that the management of ecclesiastical goods is regulated. But just before we get into that, to close off this phase, some of us may be wondering, why has the church gone through all of this, defining all of these layers in canon law, when it already exists in civil law? And it's a worthy question, why bother? How do these two layers interact? Again, when this is about the history of church-state relations, this is a much bigger topic, but in the course of the church's history, we have negotiated at times what's called a concordat. It's a treaty. Remember, the church is sovereign, right? So Canada is sovereign, the Holy See is sovereign. Sometimes the church negotiates a treaty, a concordat, and when that happens, the civil government grants recognition to all of these church corporations. So it's like these church corporations get dual citizenship. They're corporations under church law, but they also have all the rights of a corporation under the civil law. And so it allows us to manage ourselves, govern ourselves according to our own principles, because we also know the history of church-state relations is sometimes the civil side, likes to get a hold of stuff that belongs to other people. And so when that happens, it can happen all at once through expropriation. Sometimes it happens gradually through regulation and increasing regulation, all that sort of thing. The church, in order to maintain her independence, to maintain her autonomy to accomplish her mission, therefore likes to be able to regulate these things on its own. Like I said, when disputes happen, they often happen around property. And so it's good not just to clarify things internally, but to clarify things in our relationship with the civil sphere, in our relationship with the governmental sphere, with the society around us. In Quebec, if a bishop creates a parish, he issues a decree creating a parish. But then he can take that decree, which is a church document, he can bring it to the government, and the government will create a corporation parallel to that of the parish. So that civil corporation actually owns the assets of the parish on behalf of the church corporation. So you see in Quebec, there's this synchronicity between the two. But of course, you have to make sure that what the Quebec law says matches what the church law says. And so there's always this dialogue going back and forth between the two layers. That's part of the way things work there. Are there any questions about this? Okay, so I'm going to use my camera. I'm going to take a picture of this board before we erase it. Perfect. We have another photographer with us. Okay. So as I said earlier, when you're the administrator of goods for another, you have authority, but you also have limits. And so that needs to be regulated. The reason I'm power of attorney for my mother is because at one point she signed a document saying, I name my son as my attorney, and here are the things he's allowed to do. So it gives a very, I think the thing is 4 pages long. It gives a pretty exhaustive list of all the various authorities that I possess to act on her behalf. Well, same thing. When we have church legal persons, we have regulations that say what they're allowed to do. And because the church is, well, it's big, and if every single entity had its own individual detailed list, it could be really hard to manage all that stuff. There are some general principles that church law applies. Church law is actually pretty flexible. It gives a lot of autonomy, especially to those lower level groups, the private groups. They run their property according to their own charter and bylaws and all that sort of thing. When you start to get further up the line, that's where you get more universal rules for ecclesiastical goods. So when we're looking at ecclesiastical goods, there are, management of property basically means transactions, right? Buying and selling and protecting the assets that are there. It may involve some things that aren't strictly speaking transactions, but which come close, like defending yourself in court. You know, you have to respond if you get sued, or if you have to sue somebody else to defend your rights in court. Strictly speaking, that's not a transaction, but it comes really close to that kind of thing. But the vast majority of, elements of administration of goods, and we all know this, is, basically looking after it. And if you're doing it as an administrator, it involves some kind of transaction. So in the church, we have 3 kinds of transactions that we try and regulate. So they are called acquisition, administration, and alienation. Now, the funny thing is, and I'm just letting you know this right off the bat, sometimes the word administration is used strictly to refer to this middle category. Sometimes we use it loosely to refer to all of this. So unfortunately, if you're wondering, you know, if you're reading a church document or you're reading a memo or a letter or something, you just got to be careful about that word to read it in context. Is it being used to refer to the whole gamut? Or is it, you know, the administration of church goods in a general sense includes the top and bottom category. So it has a narrower technical sense and it has a broader general sense. Now, before we get into what each of these categories contain, there's a very important thing we need to realize about the administration of church property, which is different from the way people who went to business school are taught. So for those of us who, you know, well, like Ted, who's a chartered accountant, those of us who have been formed in that background, David, you got your MBA, I have my BCom, we don't care generally what kind of property is what. You know, whether it's stocks and bonds or whether it's a building or a piece of land, property is property. That's generally how, in a business sense, you look at it. But the church has a bias in favor of immovable property, what we call real property. And so there's a bias in favor of land, there's a bias in favor of buildings, there's a certain bias legally that constrains those things. What sometimes is called the stable patrimony of an organization, of a church entity. Why is this? Probably goes back to the fact that for most of human history, there were no stocks, there were no bonds, right? There wasn't even cash in most cases. Everything you had was either land, buildings, or livestock. That's how you measured if you were wealthy. Now, livestock literally was movable property. It had legs or wings. It could move from one place to the other. Land, you couldn't move. It's immovable property. That's where you grew your crops, you know, where you grew your wheat or what have you, and the buildings that you lived in or used in order to develop it. So in the sort of more ancient and very common around the world conception, you divided all property between movable and immovable property. And obviously, if you wanted to, if you were trying to accumulate wealth, the way you accumulated it was through the immovable property. That was more stable. Your livestock could die, right? There could be some terrible plague that came in, or like there's that story in the Bible of Jesus talks about the guy who's plowing his field and he finds, or he's plowing a field and he finds a treasure buried in the field. Well, there were no banks back then. So if you actually had gold or diamonds or something movable that made you rich, how do you protect it? I mean, there were barely locks on the doors, you know, so you buried it. I mean, the classic pirate treasure map, you know, that we see in the movies, it's because of that was how you protected it. So obviously you can be rich with gold, but you could become not rich really fast because somebody else just grabs it, or you'll lose it, or some barbarian raiding party comes through, whatever. So real wealth, stable wealth that can be transmitted from generation to generation was basically land and buildings. And so it was yours, it was in your family, you passed it down as an inheritance from one generation to the next. And that is why when you think of nobility in Europe, you know, the dukes and the princes and the counts and the barons, they didn't just have a title. They got that title because they had land, right? The dukedom, the duchy, the barony, the county. The word county means there was a count in charge of it, you know? So that's kind of the idea. Real wealth was understood to be immovable property. Other kinds of wealth, yeah, it could make you rich, but it was considered a lot less stable. So again, just to put these concepts, stable patrimony. The concept of stable patrimony. Patrimony, the word pater, patris, means a father. So patrimony, patrimoine in French, is the property that gets passed down. There's this concept of it being passed down. So again, real wealth in the ancient world, even today, was often considered that kind of property. So stable patrimony was generally immovable. Immovable. Yes, the bishop can spell, I hope. Okay, so that's land plus buildings. And then you had your movable property, which literally was movable, livestock, or, gold, whatever. That was the way it worked. This breakdown between movable and immovable is still found in codes of law around the world today. And think about land, right? You have a land register. You have title to your land that's registered somewhere in a public record. Why do we do that? Why bother? Which carefully delineates the boundaries of your property. Well, because if we didn't, then somebody would start to move the stakes, and somebody would say, well, that field belongs to me. And then you wind up with the reason why dukes and counts and barons were going to war with each other all the time. It was to defend their patrimony. Now, in modern societies, this matters less. In modern societies, wealth often comes precisely because you have a big bank account, or because you own a lot of mutual funds, or because you own a lot of shares in a company, right? It may be because you own a lot of buildings, but frankly, buildings sometimes are more trouble than they're worth, literally. So this distinction, like I said, for those who are getting their business degrees in the modern era, this distinction is not as important. We see echoes of it, but it's not as important. But for the church law still contains these kinds of concepts. So when we talk about acquisition, administration, and alienation, we have to keep in mind the idea of stable patrimony and the distinction between movable and immovable property. You'll see why through some concrete examples. So, acquisition. Obviously it means to acquire stuff. How do you acquire stuff? I mean, in ordinary life, you buy it, or somebody gives it to you, right? So if you buy it, you're actually converting one asset into another, right? You're losing money in order to get the gas you put in your gas tank, or to get the car that you're going to put the gas in, whatever. Sort of raw acquisition, just pure wealth increase, generally comes, and again, we're thinking of the church as a government. Think of, how does a government acquire wealth? Well, most obvious answer is taxes, right? So the government can tax. The government can charge fees. If you apply for a passport, you don't get it for free. You have to fill in all your forms and you pay a fee. That's money going to the government for a service. So there's taxes, there's fees. Another way the government can acquire money is through donations. I don't know if you've ever noticed, but when you fill out your tax forms every year, your income tax forms, there's the section on donations, and there's a line for donations you make to the government of Canada. I don't know how many people actually put a number there. Maybe there are some very patriotic people who decide they're going to donate to the government of Canada, but you could, right? So a government can receive donations. And finally, a government can reap the fruits of its current assets. So for example, if you go to visit the National Art Gallery, you may have to pay a fee upon entry, right? So you're actually earning income through providing a service. It's not just a fee like for your passport. But the biggest category of earnings, we'll call it earnings, is generally earnings based on investments. The Canada Pension Plan has to invest money so as to provide pensions for people down the road. So it has to track the earnings of all of those investments over time. So for the government, as you can imagine, the biggest source of revenue is going to be taxes, right? That's the big one. And the smallest source of revenue, probably the donations, right? That's probably the smallest, is the donations. Biggest is the taxes. Earnings is probably second, just because of the size of some of these government portfolios. And then fees, I'm not sure how much money the government is making off of our passport fees. They're probably issuing passports at a loss. It's not a big profit-making venture. And the government regulates through its own decisions, how much each of these things is going to cost, and how it has a budget and it figures out how much it's going to earn. In the church, works pretty much the same way. Again, the church is sovereign. The church is like a government. It has government entities, the Holy See, diocese. And so, but obviously for the church, the biggest category is donations. The church lives by the generosity of its members. It's always been that way. I mean, the New Testament, St. Paul talks about the gifts of the people of God, and he writes in one of his letters a thanksgiving to one of the communities that was quite poor, but was taking up a collection to support persecuted Christians in another part of the world, Christians who were suffering in another part of the world. So really that's the greatest source of wealth we have in the church, is our people. And it's people with a generous heart. And we have to say that over and over again. The wealth of the church is not in buildings, it's not in land. That's property, but it's not necessarily wealth. The real wealth is the hearts of the people who just want to contribute to this mission. With the church, there are earnings. I mentioned the Canada Pension Plan. Well, there's a diocese can have a pension plan, so you have to take money that you possess and invest it, reap the fruits through good management, and then obviously spend that, apply that money to good purposes. So this exists also in the church. I'll say earnings. Fees. For those who've worked in a parish, you know that sometimes in a parish people will come and they'll say, well, we'd like to have a funeral for so-and-so, and there'll be a small fee that the family is asked to make. It's not a donation. It's a fee. They're asking for a service. But sometimes they will donate even more, right? But if you set a base fee for a particular service, usually the fee does not cover the cost of the service, just like the money you pay for your passport doesn't really cover the cost of everything involved in creating a passport. But it's a contribution to the life of the community for the sake of that service. So these fees exist. I don't know any parish that could survive on the basis of fees alone, with the possible exception of very ancient churches that charge an entrance fee to tourists. You see that in some churches. I know of one church in Montreal that they get so many tourists coming through, and just cleaning up after all those people takes money, and so they charge a fee, not so much to the individuals entering, but to the tour companies, saying if you want to bring in a bus, then you have to contribute. So they will charge a fee. And then there's taxes. The church does have taxes. It does exist. We do not have taxes for individuals. If we go back to our previous board, I'll just flip the board quickly. So if we look on the government side, the layers of government, federal, provincial, municipal, they have the power to tax, and they will tax individuals. The proof is we pay taxes, you know. And they will tax corporations. Corporations as legal persons will have to get taxed. On this side, when there are taxes imposed by a higher authority, it isn't normally the private side, the private owners who get taxed. It's the public associations that get taxed. So what that means normally, and something people don't always realize, in the church, the money doesn't flow top down. It actually starts from the bottom, just like in the government. The government doesn't have any money except for the money the citizens give it, which it then coordinates, hopefully, for the common good. So parishes receive donations from the faithful, and there is an amount that is given to the diocese, and the dioceses are asked to contribute to the expenses of the Holy See, etc., etc. So taxes, a parish doesn't have the power to impose a tax. Who would it impose it on? I mean, think about it. You know, who would it tax? Can't tax the parishioners. That doesn't make sense. Little detail, though. There have been times in the history of the church where parishes did have the power. In Quebec, there's a period in Quebec's history where parishes could set parish dues, and the people living in the territory of the parish were expected to pay their dues, and the parish even had the power, you know, like if you don't pay your municipal taxes, the municipal government can grab your house. Well, believe it or not, that power is also associated with parishes. I don't know of it ever happening, because here's the thing, nobody likes to pay taxes. I mean, some of you, maybe you do, or people watching this online, I don't know. But in my experience, people don't like paying taxes. And so if somebody comes along and says, you must pay, then it builds resentment. And so the power to tax in the church theoretically could include individuals, but practically it does not. Our canon law does give the power for a bishop, for example, to impose a tax even on individuals, but try collecting it. You know, so we don't work that way. We work through voluntary donations. That's the biggest part of how we live. And the nice thing about it is it helps keep us accountable. You know, with a regular government, it charges taxes, but if you don't like how the government is spending the money, you can vote them out and put in another one, right? The church doesn't have the same kind of democratic structure, but we still need to have accountability. So the accountability comes through donations. You know, it becomes one of the mechanisms that we have in our church in order to keep that constant dialogue going with our people. You know, and it's about stewardship. If people are saying, I, in my desire to live the mission of the church, will give money for the mission of the church, they deserve to know where it's going, and they deserve to know that it's being well spent. And they deserve to know that, you know, it's not being used to, I don't know, give the bishop a super fancy house. I mean, Pope Francis is really big on this, as we know. He is very big on accountability and use of church goods for the mission of the church. So that's acquisition. Alienation, I'll go to the last one next. Alienation is about letting go of property. Now earlier I gave the example, you know, how do you get stuff? You can buy it. But in buying, you're actually converting. So you take money and you buy a car. So you've converted money into a car. Technically you haven't, theoretically your net worth has not really gone up, right? Maybe your usefulness of your property has gone up because you had too much money and not enough car. So you swapped them. But because the church has this concept of stable patrimony, what it means is that there are certain kinds of transactions. The opposite of a purchase is a sale. So there are certain kinds of sales. In a sale, like you sell your car, you're doing the opposite of buying it. You get rid of your car and you get money in exchange. But because we have this bias in favor of movable property, not all property is the same. That means that certain kinds of sales certain kinds of transactions are subject to extra checks. And so that is an example of alienation. So alienation typically means sale or donation of stable patrimony. So the sale of a church, the sale of a piece of land, it's not the same thing as, you know, selling excess paper we have in the photocopy room. It's not the same thing as telling our investment managers, you know, swap out some stocks and get some bonds or vice versa. That's all movable property. This kind of thing which affects the stable patrimony is subject to extra verifications. And because it is, it means that there are some kinds of transactions which are sort of pseudo or quasi-alienations. Like, for example, okay, we're not going to sell the land. We will lease it for $1 a year for 100 years. We're not selling it, we're just leasing it. Well, come on. Under church law, long-term leases are also considered alienations. They're not strictly speaking alienations, like we still own the land, but if you're leasing it for $1 for 100 years, let's be real, you know? I mean, it comes to the same thing. You're giving up your rights to it to some degree for an extended period of time. So things like long-term lease would also be included here. What else could be included in this category? Any kind of transaction that risks making the patrimonial situation of the church worse gets included there. Suppose it's not a piece of land, suppose it's a painting. But it's a painting of tremendous artistic value, or a sculpture, or a stained glass window of tremendous artistic and spiritual value. Well, you don't sell that like you sell just an ordinary piece of property, right? You have to make sure the thing is being treated. It's a cultural artifact, a spiritual artifact. So the alienation of that, some of those things you can barely put a price on. You know, what price do you put on the Pietà in Rome? I'm sure somebody out there would be willing to buy it, but in some ways these things are priceless. And so if you want to dispose of an asset like that, so objects of artistic or spiritual value, they'll be considered as alienations, not just as simple sales, because of the nature of the underlying asset. What would another example of this sort of thing be? Change of designation. Declaring that an empty lot that the church owns will now be used to bury the dead. So it becomes a cemetery. Well, it's not an alienation per se, but if it was an empty lot, you could theoretically sell it to build a house. Once you started burying people there, you're pretty much locked in to the purpose of the empty lot, you know? So that is a change of designation that, again, that affects the future possibilities. So a change of designation would be an example of alienation. It's not a sale. It's still owned by the church. That's the funny thing. It's still owned by the church, but it could be considered an alienation or a category of administration that we'll get to in a moment. It's a quasi-alienation. Another fun one that we see sometimes is called change of control. So what's a change of control? Change of control happens when you keep your corporate structure. The corporation still owns all the assets it had before. Nothing has changed in its charter and its bylaws and all that. But you swap out all the members of the board of directors for a new board of directors. So the new board now has control of all the assets of the corporation. So one could argue, well, we didn't sell anything. But once you've turned over control of your corporation to somebody else and you can't get it back, that's a change of control. And so it has to be considered the equivalent of an alienation. So those are examples. These are subject to special restrictions, which I'll get to in a moment. So in between, we have administration. This is the day-to-day. This is the bread and butter. This is the ordinary stuff that happens, you know, getting bills in the mail, signing checks, paying the bills, paying the salaries, you know, tracking the revenues, yada, 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 the usual stuff. And so administration has, again, two categories: ordinary and extraordinary. Essentially, ordinary would be, often people think, oh, what must make the difference is the size of the amount, the size of the check. Not necessarily. You know, to pay a heating bill could be a lot of money if it was a cold winter. Maybe a lot of money, but it could still be ordinary because it's normal you pay your heating bill, right? On the other hand, an extraordinary administration could be like a one-time thing that either has a significant value or a significant purpose. Alienations are always considered an extension of this category of an extraordinary thing. Believe it or not, there are also extraordinary acquisitions. Somebody leaves money to the church in a will. But in their will, they say, I want this money to go to a specific purpose. So you're accepting the money, but you're accepting it with a condition attached, which means you have to think about it before you just cash the check. Once you cash the check, there's also you're stuck with the condition. There's also the fact that if you receive an inheritance and you accept the inheritance, you could also get stuck with the debts of the person who died. You know, if they had $10,000 in the bank account and $1 million of debt, and you accept your share of the inheritance, you accept the assets, but you also accept a share of the debts. So accepting inheritances is something we have to be careful about. So it's an extraordinary acquisition. And so we have to, basically, ordinary means day-to-day. Extraordinary means think about it, consult, look at it carefully. Alienation generally means also get special permission, special authorizations. Is this clear so far? I'm not going too far, too fast? Okay. It can be hard to pin down what goes exactly in what. I'll give you an example. I know of a religious order where they defined, among their stable patrimony, they defined their library and their archives. A lot of their members had been teachers, university professors, and so they had this whole accumulated library of all the books and articles and conferences that their various members had done. A wealth of intellectual capital. Books are movable, right? You can pack them in a box. A library is a little less movable because there's a lot of books, right? And the idea is there's value in having all of them in one place as opposed to separated out. And so they defined their library and archives as part of their stable patrimony. And by doing that, it means a future administrator down the road can't look at this and say, it's just a bunch of books. Let's pack them up in cardboard boxes and put them in a moldy basement. Once you've defined it as stable patrimony, you have obligations to protect it, to preserve it, and so on and so forth. So they did it. I mean, I always wondered, why did they do that? Because once you define it as stable patrimony, you have more restrictions. Why would they give themselves more restrictions? But it's precisely because you don't always restrict yourself, right? You're restricting everybody else. You're trying to create an environment where people have to come to a common mind about stuff. It doesn't mean they could never get rid of their library. I mean, what if the religious order stops having members and so they have to, there's nobody around to look after the library anymore? Well, then they have to alienate it to someone else. But they would look for a group that will honor the heritage and find a way to maintain the mission. So in the Canadian Conference of Catholic Bishops actually has defined some aspects of the difference between ordinary and extraordinary administration. There are 5 things that are mentioned. Non-cumulative acts over 5% of a certain maximum amount. They set a maximum amount and then they index it. So that 5% comes to roughly $250,000. So, and it's non-cumulative. So in other words, if it's a single thing, now, you know the old trick, okay, it's $250,000, so we write 2 checks of $125,000. There's a rule in law, you can't do indirectly what you're not allowed to do directly. And so that's fraud, all right? The $250,000 is not just the amount on the check, it's the amount that arises because of the transaction. So any transaction above that amount requires a special authorization. Acceptance or refusal of an inheritance, a bequest, donation, or foundation because of long-term obligations. I already gave that one as an example. So that's an example of extraordinary administration resulting from an acquisition. Erection of a cemetery. Well, that's a change of designation. I already gave that example. Court action. Technically not a transaction, but you know, going to court is a big deal. And so court action, initiating court action normally requires special authorization. And purchasing of real estate. Again, real estate is generally, we're not property flippers, you know. So purchasing of real estate is a big deal. Now, sale of real estate would also be included, but that's already in this category. Here we're talking about purchasing. So purchasing of real estate. So the sale of real estate is here. While the purchasing of real estate is here. So those are some examples of types of transactions. But to be honest, the easiest way to figure out the breakdown between ordinary and extraordinary administration, and this applies for dioceses, but it's even more important in parishes, is the budget. Essentially, if your finance council of a diocese or a parish has established a budget and the expenses are being paid based on what's in the budget, it's considered ordinary. Because the budget got established by an authority, right? It's not Ted who sets the budget as the finance officer. It's supposed to be a group that looks at it and establishes the budget. And that budget, once it's passed, gives the finance officer the authority to pay the bills. If a new bill comes along that wasn't in the budget, it pretty much is automatically considered extraordinary, which is why a lot of budgets wind up having a line item, extraordinary expenses, with a cap. So if you're going to break a budget item, that gives some flexibility for the stuff you didn't expect to have happen, but it's just not that big a deal. So you set a cap. And the idea is if you're going beyond that extraordinary expense budget, then you need a new budget, right? Or if your budget's being blown. That's why one of the biggest functions of a church finance council is to establish the budget and to monitor the budget, basically. And as long as it's doing that, it gives freedom to the finance officer, because otherwise the finance officer, parish or diocesan, is kind of left hanging, can I write this check? Can I present it? Should it go to another group? And of course, it winds up saying, oh, I'll go see the bishop, right? And the bishop will say. The problem is the bishop doesn't always have the authority either. The bishop is bound to consult or even get the approval of a diocesan finance council in some cases. So the idea is, oh, well, the bishop will decide, got to be careful about that. So the budget is really the key instrument. Now, it may be that in the budget we foresee a key expense, such as the sale of a church. That's okay, you can put it in the budget, but when the actual transaction comes, you will need an additional authorization for the specific transaction. It's not simply because you passed it in a budget, it's okay. So acts of extraordinary administration that were in that list, or alienations, they will also need some measure of additional approval in many, many cases. So our system is designed to allow for distributed management of church property. Diocese owns assets, parishes, in theory, own assets, religious orders own assets, the Knights of Columbus own assets, the various clubs and associations own assets, which is why one of the problems that we face is a public perception problem. When we say, you'll sometimes hear people say, the church is rich. Yes and no. Like I checked the Vatican budget recently, and I think it's about half the size of the budget of the city of Greater Sudbury. So it's a lot of money. It's more than any of us have in this room, but it's not sort of a megacorp, And the thing is, within the church, it's like, how much money does Canada have? Well, it depends. If you're considering the government of Canada versus the government, the provinces, the cities, the corporations, and every single individual, well, yeah, then Canada's fabulously wealthy. But can Canada really be said to own all of that, or is it owned by those people? And so that's another thing. That's why we have to distinguish between ecclesiastical goods and non, but even within the ecclesiastical goods, I can't go around treating the assets of parishes as if it was my own. Parishes are really supposed to be the owners of the assets from the donations of the people. Yes, there's an amount that can come to the diocese through that tax that I was talking about, through fees and other things. There has to be a respect for that, and the church, by establishing local ownership and local management of property, it actually is designed, when it works well, it's designed to sort of unleash the vitality of those communities, because they don't have to be constantly sort of begging for permission as to what to do. They have some measure of autonomy. Not totally. A pastor is not allowed to sell his parish church. I know of a case where we had to intervene once in a previous diocese or another diocese where the pastor decided he was going to lease his rectory to a community group. And he was ready to sign a 20-year lease. And we had to step in and say, you don't have the authority to do that. He says, well, I'm not selling it. Yeah, but it's an alienation. So you've got to look after that. So there's a lot of training that needs to happen. By the way, one of the reasons we're recording this, there's a lot of training that needs to happen, but these are sort of broad and general categories. Each diocese will establish its own local rules, because the law in Canada is different from the US, the law in Ontario is different from Quebec, the law in countries in Europe will be different from that in Africa or Asia, whatever. Even the relationship between church and state will be different. There are some countries where the church isn't allowed to own anything. In Mexico, for a while, under sort of the previous constitution, church entities were not recognized, could not own anything. So all church property was owned by individuals who promised, basically, that they would hold it in title for themselves, but they would do it on behalf of the church. But obviously you've got to pick the right people. You know, you got to pick the right people because, you know, just think about it, right? You're running out of room in your garage and your neighbor says, well, I'll hang on to your tools. You can store them in my garage. Okay, better make sure you trust your neighbor, right? Because if a dispute happens, you've got a problem. So that's the kind of thing that we can sometimes encounter. Is this clear? Okay. Now I've already used 2 boards, so I'm going to flip the other board and erase it. We're going to turn now specifically to dioceses and parishes and how those operate within this overall structure. I could theoretically also talk about, you know, how religious orders are supposed to manage their property, but whatever, you know. They can get their own presentation. No offense to any religious order people watching this video, but obviously, as diocesan bishop, my key interest is in the dioceses and the parishes. Oops. Okay. With a regular company, and I mentioned this at our first session, just check the time. People often think the church is a company and the church is managed. It's not. The church is sovereign. It's like a country. So it's not managed, it's governed. The goods are governed, first and foremost. So, with a regular company, I'll show the contrast between the two. Suppose you create a company, a legal person. So who runs it? Who's the boss in a company? Is the board of directors, right? So you have a board. And it's composed of people, usually at least 3 people, and they meet and they make decisions. And then the board appoints a CEO, and that person does the ordinary day-to-day operations and will create a budget and bring it to the board. Remember the other board about extraordinary and ordinary? So the CEO gets authorization to do certain things. Otherwise, you'd have board meetings every day, right? So between board meetings, you have an executive committee, often that can look at stuff, and then you have the CEO who does the ordinary day-to-day stuff, but will create plans which the board approves for mergers and acquisitions, sale of business units, blah, 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 all that stuff. So the board is the boss, the CEO reports to the board, and the CEO then is also responsible for the staff. You know, the whole team, whether it's 10 people or 10,000 people who work together for the good of that. And this is true generally for nonprofits as well. Most nonprofits work on this basis, are structured this way. This is not the church structure. With the church, let's take a diocese. Who's the head authority on a diocese? The bishop. Who's the CEO in a diocese? The bishop. You see the interesting contrast here. The bishop is in charge of it. Like the board supervises the CEO, and the CEO reports to the board. I report to myself. Obviously, this can create a problem, right? So we try and filter out who gets to be a bishop by, you know, examining their background and hoping they're suitable and all that sort of thing. We do preventive measures, but here's the thing. Most bishops are not trained in business. So we can handle the preaching and the sacraments and all that, but when we start getting into the nitty-gritty of administration, it can be tricky. That's why a lot of bishops are actually selected from among priests who worked in diocesan administration before, precisely because they got at least some real-world experience. That's often the case. But unfortunately, it can also mean that bishops wind up getting trapped as administrators in their diocese. I don't know any bishops who went into the priesthood saying to themselves, boy, if I'm really lucky, I'll get to be an administrator. I really don't know any. Maybe there are. I mean, it takes all kinds to make a world, and it takes all kinds to make a church. But this is why in the Acts of the Apostles, when there was a dispute about the management of a financial service, they created their first, it's probably the first record in human history of life insurance. People paid into a common fund, and then if the husband died, the widow would be looked after. And so that's life insurance, right? That's essentially the core idea. And there was a dispute because the Greek-speaking widows weren't getting as much as the Hebrew-speaking widows. So that's a form of racism or corruption or something that was going on there. And so what did people do? They went to the bishop, the apostles. And they said, hey, you got to fix this. You're the authority. And the apostles appointed deacons in order to look after it, because the apostles said, no, we have to focus on preaching of the word, and we have to focus on the sacraments, prayer. So that's why they assigned them. And it's one of the earliest examples, probably the earliest we have in the history of the church, in church literature, of that distribution of asset management, that distribution of church goods management by empowering people to solve their issues locally while retaining an appeal mechanism and a supervisory mechanism for the bishop. It's right there, black and white, in basically 4 sentences or roughly in the New Testament. It's quite extraordinary when you actually peel the layers from that story. But what would have happened if the apostles had said, great, yeah, all right, we get to manage the insurance company? Thankfully they didn't, but there were probably a few people who walked away from there going, they appointed deacons. We didn't ask for deacons. We asked for the apostles to take care of it. It's hard to keep everybody happy. We all know that. The bishop, things are going to come to the bishop's attention, and he does have a key responsibility. And in our structure, because it doesn't have the same kind of accountability as you have in a corporation, there is accountability. It just doesn't work identically. So the way it works in church law is the bishop has to have a council for economic affairs, otherwise known as a finance council. It's not the actual best translation from the Latin. In English, we call it finance council. In French, they actually call it Conseil pour les affaires économiques. Pope Francis created one for the Vatican as a whole, the Holy See as a whole, and it was translated in English as Council for the Economy, which is really awkward, but basically it means Council for Business Affairs, Economic Affairs, that kind of thing. But in English, we call it a finance council. That's what you find in the translations. And the Council for Economic Affairs, in addition to this, there has to be a finance officer. Again, in French, because French is closer to the Latin, you would have that person is called the économe. Literally the economist, the person who looks after the economic affairs. So the reason I prefer that, honestly, not just because I'm from Quebec and that's what I kind of grew up with, learning this sort of stuff, but because finance in English is often considered limited to money and investments, and you're looking at it purely from a productive angle, while economy includes the whole range of activities, insurance protections, legal affairs, et cetera, et cetera. But it all depends on how you define it. So a bit to go back to very, very early on in our session today, I am the manager of my mom's goods. I have authority, but I'm also limited, right? I'm limited by I have to act in her best interest. Now, one of the things that happens in Quebec, again, my experience is there, suppose somebody is in a situation where they don't have a power of attorney document. What you can do in Quebec is the family members can convene what's called a family council, and they, as a family, members of the family, who presumably want to care for their relative, presumably, they can appoint someone as the administrator, even if that person didn't name an individual in advance by a document. But that person has to report to the family council, they are the administrator, they have authority, but for certain kinds of transactions, like selling the family home, selling the family silverware, the heirlooms of particular cultural or historic value that belong to the patrimony, that artifact has been in the family for 200 years, cultural importance, all the things that I talked about, on the previous board. For an individual who can't care for themselves, the same kind of rules apply. So in our case, the bishop has authority to manage this. He has authority. The finance officer has the ordinary administration. The finance officer is given a budget, and the finance officer does not need to go running to the bishop for every single transaction. Thank goodness. For everyone involved, okay? The bishop, the finance officer, and everybody else. Imagine you had to get individual authorizations every single time a paycheck had to be written. That would be insane. So the budget empowers the finance officer. For other things, if it's extraordinary administration of some kind, then the finance officer sees the bishop, and the bishop, together with the finance officer, will ask themselves, Bishop, can you authorize this? Maybe I can't. So if I can't, then I have to go to the Council for Economic Affairs. The Council for Economic Affairs has to prepare and approve the budget. So remember I said the budget empowers? So what if, in order to get around me having limitations, I decide, I'm just going to make a budget that with one line item, everything is extraordinary and it's authorized and there we go. Well, that's not going to work because the bishop he's not the dictator of the ecclesiastical goods, just like I'm not the dictator of my mom's property. You have to get it approved, running through a Council for Economic Affairs, and any of those really special transactions also have to go to the Council for Economic Affairs. And if an alienation goes beyond, remember I said there was this upper limit set by the CCCB? I checked online. The current upper limit is $5,745,391. Pretty precise. It's because they set an amount years ago and then they just indexed it every year. So you add a percentage and it gets up to that. So in other words, if I wanted to sell a piece of land that was worth $5,745,930, it's below the limit. If it's 32, it's above the limit. That triggers the obligation to actually go beyond the council to the Holy See. I was assisting in a transaction once for a diocese that owned a piece of property in the heart of the downtown of a major city. And that piece of land had an office tower on it. Multi-story, AAA grade office tower. That transaction was worth more than $5 million, let me tell you. And so, because it wasn't a sale of the land, but it was a conversion, there was a question of a long-term lease and extending it and all that sort of thing. So because of that, it was one of those quasi-alienations, and it had to go to the Holy See. I actually flew to Rome to talk to people in Rome about that particular transaction. So you have, for these extraordinary things, you've got ones that require ones that the CFO, the finance officer, can do alone. And so that's essentially ordinary and in the budget. You've got ones where the bishop can authorize, and that's generally something, I had read it to you before, 5% of the maximum amount, so 5% of that 5,700,000, yada yada. So let's say, well, just to make it simple, let's say under $250,000. That's for Canada. Could be different in the US, could be different elsewhere. If it's above, greater than 250,000, so then it has to be the bishop plus the council. And I won't get into too much detail, but there's also another group called the College of Consultors. It's a group of priests, and they need to be consulted because these transactions often have a pastoral impact, and so you have to assess the pastoral dimension of the transaction, not just the economic dimension. And then if it's greater than the 5.7 million, then it's the bishop, the council, and the Holy See. That's for a diocese. So that is for the management of the property of a diocese. There are threshold amounts. There are categories of transaction. And so essentially, if you're going to run the economics of a diocese, and this is really important for our new Vicar General especially, because he's got a major role to play in this. If you're going to run a diocese, you've got to have a budget, because that authorizes a whole bunch of stuff. And you have to evaluate, okay, is this transaction in one of the reserved categories, and how do we get that going? So another really important thing for a diocese is to have a council of economic affairs to assist the bishop in the administration of all of this. The council is not a board of directors. Like in a board of directors, they can fire the CEO, and they can tell the CEO, you must do this. They can say, don't do that. They can set restrictions, but they can also impose obligations. A council for economic affairs cannot force the bishop to do anything, but it can roadblock. It can say, Bishop, you can't do that. It's not allowed to say, you must do this, which means that sometimes you can wind up, I mean, I hate to say it, but human nature being what it is, sometimes you can wind up with a roadblock between the two if your council and your bishop are not in sync. As an aside, by the way, who appoints the council? The bishop, right? So you'd think, well, if they do get into a tension, well, the bishop will just swap them out, except canon law is not dumb. Canon law says that a person is appointed to this for 5 years and can only be removed for a grave reason. And if they're removed and they think it was for an illegitimate reason, they can appeal to Rome. So if you're swapping them out just because they didn't agree with you, Rome will back up the council and will start to pay more attention to what's going on in your diocese. So, what's a grave reason? Well, suppose you found out that a member of your council had a criminal conviction, for fraud or something. Well, that might be a reason to have them removed, because you need your council, obviously, to be people of skill, integrity, courage. I mean, you can't have people who are just going to sort of bow to the bishop and say, oh, whatever you want, Your Excellency. That's the wrong people to have on a council. And honestly, if you have the right people, then the bishop, his credibility goes up too. It's the credibility of the church that's at stake here. The canon law says that the members of a council for economic affairs should be people who are skilled in either business management, financial affairs, or in legal affairs. Lawyers, that sort of thing, paralegals. Just because very often the interaction between financial affairs and legal structure. I mean, I spent the first half hour of this talk today all about legal structure because it all goes hand in hand. So those are the kinds of people you're looking for. So that is the internal governance of the diocese as a corporation. We have just enough time to go over the last point, which is something called vigilance. So I'm going to flip the board again. We can take a picture of this, certainly. We should all pose in front of it. There we go. Now, the last part, vigilance, is important because it has to do with the interaction between a diocese and the parishes, which obviously is a big part of the way we live our life as a church. And, you know, remember I said the bishop's not allowed to act as dictator of the assets? Well, imagine if a bishop decided, you know what, I'm just going to sell a church. Maybe the parishioners have something to say about that, you know? So, again, because of the possibility of disputes, because of the possibility of arguments, you know, it's sad to say, but that happens. We're all human. Because of that possibility, we need to carefully define how those various layers work. Because it's not supposed to be top-down management. It's supposed to all be supportive. People supporting from below. The Council for Economic Affairs, so the Council for Economic Affairs, otherwise known as the Finance Council, the Diocesan Finance Council, has two jobs. Administration and oversight of strictly diocesan economic issues, of strictly, I'm going to put this in a big box, strictly diocesan. And that by diocesan, I mean diocesan economic affairs. By diocesan, I mean, remember each diocese is its own legal person, so that legal person. But also, it has a duty of oversight, of what we call vigilance. So that's also oversight. For all juridic persons, actually, let me rephrase this. All public juridic persons subject to the diocesan bishop, which I remember once in a document, it was turned into the acronym Public Juridic Persons Subject to the Diocesan Bishop, because it's really an unwieldy phrase. But what would those be? I've already erased it, but if we go back to our very first board, we know that in a diocese you have parishes. Each parish is its own legal entity under canon law, but it's not independent. It's under the authority of somebody. The municipalities in Ontario report to the government of Ontario, so that would be parishes. I gave the example of a seminary, so if a diocese has a seminary, then a diocesan seminary. If there was, if they're separately incorporated, if they become legal persons, definitely. If there was a religious order that was founded that was strictly diocesan, some religious orders are under the Pope. They're of pontifical right. They're not subject to the diocesan bishop. We have the Jesuits in our diocese. They are pontifical. So I don't have the authority to go in and monitor their budget. But if you had a new one that was starting, it was strictly local, a local monastery of nuns or monks, until it gets that pontifical status, it would be subject to not the management. We don't manage their money. They are a separate entity. They look after it. But there is oversight that needs to happen. There has to be vigilance. We're allowed to go in and say, brother so-and-so, sister so-and-so, somebody came to us and said their mother donated money, and they're wondering what happened to it. Because they donated it for a purpose X to buy this statue, and instead we see something else happen. Who's allowed to ask questions, essentially, is the issue. The CAE, the diocese, is allowed and has the duty to exercise vigilance over these groups. So they have autonomy, but they also have accountability, and that's the accountability structure. For the diocesan corporations themselves, it is the direct administration and the oversight of the CFO. I'm going to erase the word oversight just to avoid confusion. Direct administration. But for the others, like in our diocese, TED does not minister all the day-to-day of every single parish. That would be crazy. It would be impossible. So they have to look after it because they are their own reality. They have an identity. But they are answerable. I mean, if something goes wrong, who are they going to call? Just go back to the Acts of the Apostles. Something was going wrong with a public service being offered in the church, the care of the widows. Do governments regulate insurance companies today? You better believe they do. Back then, they needed to regulate what was going on to support the widows, and that's why they appointed the deacons to accompany and to exercise vigilance. So parishes, seminaries, I gave the example of the Apostolic Insurance Company. That's not what it was called, but it'd be kind of cool if it was, but that's not what it was called. But any of those public associations of the faithful that they have their autonomy. Those are the crown corporations that I talked about within the church. They have their autonomy, but there is some oversight that needs to happen. Like I know in one diocese, there's a group of the faithful together with the diocese. They went to the bishop and they said, look, we know about TV production. We know about journalism. We know about websites. Let us create a local diocesan television channel. It didn't wind up on TV. It was just being broadcast through YouTube, but very professionally organized. They had their own corporate structure, their own charity number, their own board of directors, all of that, but they were doing it on behalf of the church in partnership with the diocese. And so obviously, suppose somebody on TV or on the YouTube channel winds up making all kinds of, crazy statements or creating division or being aggressive. You better believe the bishop's phone is going to ring, so some kind of oversight needs to happen. So that would be an example of a public association of the faithful. I also gave the example of a local religious order. We had a whole bunch of these actually in Montreal. Small religious communities that started that never grew beyond the limits of the diocese. But they had their own mother superior or father superior or whatever, and they operated autonomously. And as some of them, the members got older, and so the community had to wind down, the diocese had the responsibility, through its oversight, of helping them to transition. So a diocesan finance council will exercise that oversight. With regards to a parish finance council, a parish finance council works in many ways the same way as the diocesan one does. Now, it will operate differently. It will operate differently based on I'm going to take a picture of this. It will operate differently based on local rules and regulations. Obviously, I mean, the church law is flexible. So remember, we had company, where you have the board, composed of 3+ people, and you have the CEO. For the diocese, you have the bishop with the bishop, which is odd. So for that, you need to have a council where the bishop as administrator needs to go, and there's also a diocesan CFO who runs the day-to-day as the administrator based on the budget. So day-to-day exceptional, day-to-day really exceptional, and alienations, and sometimes even the Vatican. Suppose you got a parish. Who's the board? The pastor. Who's the CEO? So, he needs to have a parish finance council. And what is the parish finance council's job? Primarily is to set the budget. You know, very primarily, because with the budget, then the pastor can do it. Now, can a parish have a parish financial officer whose authority comes under the budget and under the pastor? Sure. There are parishes with business managers. Most parishes are so small they can't afford it, and the pastor winds up doing it. But usually there's a parish bookkeeper of some kind, you know, who acts under the authority of the pastor, who helps out with those things. This is a very important role, especially in a situation where, for example, in our diocese, we have many priests coming from other countries who are unfamiliar with the legal requirements and the legal structures and all of that of our society. They need help, and so to have somebody assisting them is extremely valuable and important. A bit like in the diocese, the council can't tell the bishop what to do. It can block him, but it can't tell him what to do. The parish finance council can't tell the pastor what to do. This is sometimes a source of tension in a parish, where the finance council starts discussing the pastor's homilies, or starts discussing, you know, baptisms are taking too long, or something like that. When you have the interaction between pastoral affairs and the financial affairs, it can sometimes become a source of tension. I had mentioned, I briefly mentioned that on the bishop's side, in addition to the council, you have this group called the consultors, which is a group of priests, and that's because you need to coordinate the pastoral and the economic, and sometimes you need to go to the Holy See if the amount is truly exceptional, beyond 5.7 million. Within a parish, if there are some kind of issues that are arising and there's a pastoral consideration, it's one of the reasons why it's handy to have a parish pastoral council to try and help discern those things. It's all supposed to work together in harmony and partnership. So there's a constant work in progress of building mutual confidence and overseeing the administration. If a parish wants to do an exceptional transaction, one of those extraordinary transactions I was talking about, where does it go? Well, the pastor needs the approval of his finance council in some cases. Who appoints the finance council? The pastor, like the bishop appoints, right? So every diocese needs to have regulations that protects the autonomy of the parish finance council. Of course, one of the things in a parish is often people know each other, so if you have a dispute, it gets around, So disputes or major transactions, on the diocesan side, it goes to the Holy See. On this side, it goes to the diocese, specifically that council for economic affairs, which has the role of vigilance. And often the diocesan finance officer is given an extra role of vigilance, not just internal administration, but vigilance. Most dioceses I know, they give it. You could theoretically have two people, finance officer for diocesan transactions and a vigilance officer for parishes and other subsidiary groups. That would be interesting. You could have that in theory. And if the parish is doing a transaction that is so big, it actually is beyond the 5.7 million. I don't know too many parishes that have that. But remember, it could happen, right? You have a parish that 100 years ago, somebody donated 1,000 acres and they're want to sell it off because now they're developing the property around that area or something like that. Really big transactions like that, those would also have to go to the Holy See. But the parish can't apply to the Holy See directly. The parish has to do it through the diocese. So I'm new here in this diocese. This is the theory. Then there's real life. Okay? And somebody just went, oh my God. Yes. What she meant to say was, oh my gosh, but yes. This is the theory, then there's real life. The thing is, this theory is there for a reason, right? It's about core principles of autonomy, unleashing the gifts of our people on a local level, but also vigilance and accountability. It's trying to balance all of those things, sharing the load of the work, at the same time making sure nobody runs off with the silverware. So, and I mean, I've seen all kinds of crazy things. You know, there's a saying in French, ils cherchent notre bien, ils s'arrangent pour l'avoir. You know, they seek our good and they make arrangements to get it. So, the theory is there for a reason. Is it possible that a diocese could have equally good structures, that accomplish the same task that don't look like this? I suppose it's theoretically possible, but the reason we have standards is so that it's easy to spot right away if things are in order or not. And if people are appealing to Rome, Rome is able to evaluate much more quickly rather than having to get into the weeds on every single situation. Secondly, that's a positive reason why to have the standard. There is another side which is a bit more defensive, you might say, and that is the idea that, if an external party, suppose somebody is suing you, and one of their critiques is, you're bad managers, and your bad management is what led to this problem for which I'm suing you, you have to be able to demonstrate good management as a defense. And if they can hold up the church's standard for governance, and then hold up what you're doing and say they don't match, the burden of demonstrating good governance is suddenly a lot greater. It's a lot heavier. Now, that's not the best reason to do things by the book, but it's a reason. And it's the kind of reason which hopefully occurs very rarely, but when it does, you can get really nailed, And like I said, part of the problem is the evil one likes the darkness. So when things are unclear, when things are murky, when we don't really know, that's when the temptations come in. And frankly, that's when it's easier to be taken for a ride, too. If you have a council for economic affairs, that's a bunch of yes men and women who aren't competent. Their only competence is they'll agree with the bishop or the pastor and everything. Sooner or later, mistakes are going to happen that are going to be a big deal. And so it's about constantly maintaining the right people in the right place, doing the right job according to the right standard. So this talk is a sequel to our previous one for the Vicar General, because the Vicar General has a role to play. He's not the finance officer of the diocese, but the Vicar General, obviously as the senior executive after the bishop, has a role to play in helping to see that all things work well like this. And also, given that sometimes complaints come from the parish level, for example, about financial affairs, or parish financial affairs are creating an issue for the diocese as a community of parishes. You have to know this, otherwise people can invent solutions without checking off all the boxes. And there's nothing worse than having to redo this because you forgot to cross the T's and dot the I's. It drives everybody nuts when that happens. So that's an overview of legal structure, transactional structure, authority structure, authorization, and vigilance structure. Are we there in our diocese? We should probably turn off the cameras for this part. Like I said, there's the theory and there's real life, and it's a constant work in progress to try and align things. I will say publicly, I'm very proud of the team that works here at the diocese. People do work with a great standard of care, and I'm very confident that the people here have the best interest of the church at heart. That said, I would like to make sure that our structures are well designed, not because the people here are not good, but because nobody lasts forever, and we have to make sure, A, that our successors come into a system that forms them and trains them into not cutting corners but doing things right. And B, I would like the people of our diocese to know that the bishop himself wants to be accountable. That the bishop himself is not just going to appoint yes men and women to a council. The bishop himself is going to honor the intention of the donor. The bishop himself is going to try and live in manage the economic affairs of the diocese in a transparent manner. Because if people aren't too sure of that, then it harms the communion of the church. And so being able to do that, for me, it's important for my ministry. Would it be a lot easier if we didn't have those things and I could just do whatever I wanted? Well, on some level, maybe. But does anybody think that's the best way for the church to work? No. So if we're servants of our Lord and we're trying to live in communion, remember the first economic problem we had in the church, that insurance company, the first economic problem mentioned in the Bible in the early church, threatened division between two linguistic groups. I know it's crazy to think that people of two different languages and their groups can sometimes not agree with each other, but we're Canadians. We know what that's about. And so communion is a work in progress, and having good structures so as to be able to work out irritants in a way that is considered legitimate by all, I think is a very valuable exercise. So I'm grateful that the church has these rules. They're not a burden, they're meant to empower us. So thank you to everybody for attending the first of our 2 training sessions. We have our lunch coming up shortly, and for all those who may have assisted online or who will tune in later once this goes up on YouTube, thank you for listening to this, and I hope it's been helpful and useful for you. So God bless everyone.